Welcome to TheoTrade. This is Don Kaufman. It's November 14th, 2025. There's 30 minutes to go. The cash close here on this Friday afternoon with the S&Ps. They're all over the place in today's trading session. We've been lower, we've been higher, we've laughed, we've cried. Right now, they are massively unchanged. I cannot state enough. Vol is breaking. Trust nothing. We're going to cover that and much more here, of course, on this TheoTrade weekend update. When I'm talking about vol is breaking, yeah, I'm talking about volatility. Now, some people like to look at VIX. All right, you got me. Let's do this. Let's cruise over to the VIX, and you look at the VIX, and the VIX is above the 20 level. Look, we've all seen a 20 VIX before. Doesn't tell you a whole hell of a lot. The volatility futures, ironically, are right there with it. The volatility futures are sitting at 20, but I am going to show you something right off the bat here, and that is when you start digging in a little bit to volatility. We're not looking at 5-day, we're looking out here at like 33-day volatility, and then let's really kind of take this, to a kind of a deep level here right in the first minute, of course, in this weekend update, and that is, this one is a little bit perplexing. So the marketplace is showing like a 20 vol 33 days from now, right? That's the volatility futures. And you go a little further out than that, and it's still jacked up to like 21.32. So we're still in a significant, what is often termed contango. And you go a little further out, even like 96 days out, and you're like, holy crap, that goes all the way to 22. So time out. If you're brand new, okay, to understanding volatility, and I'm talking about vol is breaking, the interesting aspect in this case, back month volatility is still sky high. Back month vol is looking out here at Jan or Feb. So it doesn't matter what you say about like, oh, right now, okay, they're already projecting substantially higher volatility, okay, for months ahead. And markets typically do that. But what's interesting about this particular kind of vol break is when you start digging in and looking specifically at these volatility contracts, and I can do just that. It's like a VX, okay? This is an F26, and I'm actually going to type in the symbol, okay? What's really interesting is these volatility futures are moving a lot. It actually projects, okay, that the future of the marketplace is going to be considerably more risky than the present, which again, kind of getting wild out there already. When you think about this, and the volatility futures, they typically don't have that marketplace back there move up like it has. I'm going to leave that one right there for you, because when I'm talking about vol is breaking, like, I pay a lot of attention to volatility. Now, I know everybody wants to look at different levels and so forth, but quite frankly, you start looking at levels, what do you got here? This is a 30-day 1 hour. There's a 30-day 1 hour inside of the S&Ps. You know what you got? Absolutely nothing. It's Mr. Toad's wild ride out there. There's nothing to latch on over here. Ooh, we were down here, and then we were down here again, and then we were up here, and then there's no. I mean, like, you're going to look at sectors in a second with me. It's just all over the map. Like, it literally is. It's a complete and total free-for-all. And we are going to talk about correlation as well. There's a lot of crap moving right now. A lot going on. Metals are all over the place. Volatility is projecting more risk in the back month, even after kind of all hell broke loose, yesterday. A lot to be desired in this marketplace, and it's edgy. I mean, it's really edgy. It's touchy out there, to say the least. So let's get into it here, right? So I, started off by painting a picture of you got nothing in terms of levels. And as I said, a lot of people are going to try to portray that there's a level over here. This is like a little bit of a double bottom. We're going to rally back up. If that was true, we wouldn't be projecting substantially more volatility. Speaking of projecting substantially more volatility, you also should be mindful that the VVIX, this is the volatility of the VIX itself, still sky high. This crap was all the way up to like 116. Once this thing starts, exploding like this, even if it cools off a little bit, that doesn't necessarily, mean that the marketplace is cooling off. It just means that, the professional world kind of has their hedges on. All hell is breaking loose out there. So this is still at a level where you get under the desk, start rocking back and forth. Next, let's actually just talk about some of the price action. All right, let's start there because I know a lot of people are very price action like centric. And what that basically means, just looking where price was. And the only way to describe the marketplace this week is, you know what, again, kind of do it justice over here. I'm really going to have to zoom in. This is the SPX. Okay, obviously I have expected moves drawn on here. It's the SPX. So last week, pretty good sell-off, precipitous sell-off, really, really nice bounce. Last week, we caught the edge, the lower edge of the expected move right into the close on Friday, right? So that's last week. This week, out of the gate, there's a huge bid under the marketplace. I'm going to tell you something right off the bat, and this is crap that I was talking about in the Wednesday night video. I'm going to reference it again today, right here. You see that? Volume in the options marketplace sucked. I mean, it was like below norm, not just below norm for like the month, way below norm for the month, but below norm for like the entire year. And that really threw me off because, I mean, this move inside of the S&Ps, okay, this was over 100-point move up inside of the S&Ps, done an absolutely craptastic options volume. The option volume sucked again on Tuesday. Granted, we didn't move. Wednesday, granted, we didn't move. Thursday, did 80 million contracts. Crap got real, and it got real in a hurry. But the point is, you moved up 100 points, no volume. You moved down 100 points, volume absolutely exploded, which you expect to some degree on down days, okay? But yeah, it turns into a wild ride immediately. We were the upper edge of the expected move. And then, of course, today's trade, okay, you had this huge bid back. Again, market selling off last week, this huge bid back, and then we just got smacked. And this was all tech all the time. This morning, okay, precipitous drop, a rally back. Now, the rally back, though, where is it taking us? Well, the irony is massively unchanged. The rally hasn't done anything. And I'll tell you right now, you're coming into a weekend and volatility is actually finishing, okay, unchanged. I mean, vol is basically unched into the weekend, which is also kind of unusual. Again, a sign of, you know, further risk out there. Now, there was the bid back and then the smack. That one's pretty easy. Again, I talked about the price action. Great, done. Who cares, right? You want to get interesting? Start looking at sectors out there, okay? I mean, start looking at sectors, seriously, because you know where we are in the S&Ps. In fact, I'll go back to this for just a second. You know where we are in the S&Ps? If the market closed right now, it's got 20 minutes left in the week, but if the market closed right now, we'd be closing unchanged on the entire week. If you look at the QQQ, this is the NASDAQ. The NASDAQ, okay, was getting smoked, hitting the lower edge of the expected move this morning. If it closed right this second, it would be down like a few pennies on the week, basically unchanged. So the NASDAQ comes all the way back, okay, but unchanged in the week. Okay, so why is that interesting? Because the sectors themselves, holy crap. When I say we're all over the place, the way to actually present this, we're going to look at expected move. This is like an airline ETF, okay? Halfway home to the lower edge of the expected move. This is the home builders. Home builders, lower edge of the expected move, getting hammered out there. XLY, look, XLY is really Tesla and Amazon. It's getting smoked. I know XLY, you're like, no, it's consumer discretionary. Okay, yeah, I'm using my discretion. It's all Amazon and Tesla, which not doing well. XLI, this is the industrials, lower edge of the expected move. XLU, this is what? Okay, start talking about, you know, utilities are so excited. They did get exciting, lower edge of the expected move. SMH, all right, now we're talking, because in the SMH, sorry, that's actually lower, it's semiconductors. XLV, what the hell is going on here? All of a sudden, everybody wants to buy healthcare. Isn't healthcare like the epic like crisis that's to come right now? Okay, it's this just, you know, it's literally at the epicenter of the crisis as well. And apparently this week, everybody's buying it. That's a full-fledged 2 standard deviation move. Most of the time, okay, I would actually take a short position in there, but I actually want to see how we're going to open next week. You know, if we actually bid higher, then I will. There's a lot of order flow that was bullish in here today, so I actually backed away from it. XLP. What are we looking at in XLP? Okay, XLP consumer staples. Interestingly enough, possibly defensive posturing. Defensive posturing slightly higher this week. This is the materials sector. Nobody gives a crap, but materials sector is also higher this week. Okay, totally thrown off by the XRT is another retail. It's massively unchanged. XLK is technology select, unchanged in the week. Okay, when I tell you, like, and I just went through all the sectors over there, you're like, what does it amount to? It's a damn good question because nobody else knows either. Seriously, like that's exactly my point. Vol's breaking, trust nothing. Okay, Vol's breaking out, trust nothing. That's the key in here. I showed you the sectors because it's complete and total like chaos out there. Now this morning, we saw the ghost of correlations past. For those of you that have absolutely no idea what correlation is or what the hell I'm talking about over here, we cruise over to the advanced decline line. So the advanced decline line, I personally like to look at the S&P 100. You can look at the S&P 500, it's fine, but I like to look at the AD line because what happened this morning was very interesting. At one, for a brief and fleeting moment, we actually had 90 decliners this morning. For a brief and fleeting moment, we were actually seeing correlations. But the interesting thing is the 10 products that were up, some of them actually included stuff like NVIDIA started to rally. Apple started to rally, Microsoft started to rally. Those, actually brought us back. We are still seeing, and this is real, like this is really why I'm covering correlation. For a brief and fleeting moment, we were in a correlated state. And that's important because you need correlation to have any degree of capitulation. And in my opinion, and it is just my opinion over here, and I will always tell you when it's opinion, if you think that the selling is done over here, what are you talking about? We haven't even correlated. There hasn't been any sell side activity. We got a little scared. We sold a couple of AI tech stocks. Things got a little crazy for a minute and we rallied right back up. We never saw heavy degrees of correlation. Nobody crapped themselves silly because that's why I brought up those sectors. You still had sectors that were completely unscathed. And there's the one thing I will always promise you, if you're a little newer to this business, you need to understand that if there's going to be big sell side activity, everybody's going with it. There's no XLV. Look at this. There's no XLV. Oh, it's a breakout to the upside. This is a rotation. No one's wanted to touch this crap like ever. And all of a sudden, what do you see? Well, I know you're going to come up with a reason for why they're rotating in here. You can try to reason anything you want. Fundamentally, you think fundamentals made any difference this week? It's not. And it's not going to matter when volatility really starts to kind of, hit the proverbial fan. You got to feel, like there's nowhere to run to and nowhere to hide. And right now, they're still tucking capital in crappy places. They're throwing capital down, like in all seriousness, like healthcare. If you are into fundamentals, give me some fundamentals for that. Well, there's going to be a lot less money and people are not going to have health, and it just goes on and on. It's not good. Nevertheless, this is where actually capital was rotating towards. You saw capital actually rotating towards. This is really wild because I am going to talk more about metals in a moment. But let's actually cruise over to SLV. I'll get that one right. We were actually rotating towards wild amounts of capital, rotating all of a sudden towards, metals, right up until they started selling them, in a wild fashion over there. Heavy metals, the rotations reek right now. It's just, this is like almost like it feels like a last gasp. And again, that is the part that I really want to get to, that is an opinion, is when you start looking at stuff like the financials. Oh, I saved the best. The financials. Did you realize they actually broke to the upper edge of their expected move this week? And they completely cracked. The XLF got hammered from earlier in the week. And that is, it's almost back down. To the big support level of 52. In fact, if it does break through 52 next week, crap's going to get real. The whole marketplace is going to get pulled into that. So there's areas here, that just reek of volatility. The financials are one of them. The only thing that you're like that's holding this together right now, maybe a little bit of Microsoft. But again, I was doing this on Wednesday night's video, and I'm going to do it again just briefly. Year to date, Microsoft's up 20%. NVIDIA, is only up now 37%. Just bear with me for a second. Meta's done. It's gone. Unchanged in the year. Google, this is your high flyer, up 46% year-to-date basis. Apple, it's not even really performing with the S&Ps. Amazon, pretty craptastic, up 6%. What else you got? Oh, you want to go to Tesla? Is that where you want to go? Up basically 7%. Then you actually bring up Broadcom. Nobody cares, but it's up 47%. Players, okay, have narrowed. I know I didn't cover Apple. Yeah, it's 12%. Okay, I know I didn't cover Apple, but I'm saying this looks exactly like the sectors. We're rotating now, okay, into crap, okay, from the same sector because there's just nowhere to go to, nowhere to run to, nowhere to hide, and you can actually see portfolio managers, okay, just shoving capital, making poor decisions constantly. And markets like this are going to force you to do that because nobody wants to be left holding, okay, that bag, when the music stops. And it's pretty damn close out there. Like, I'm not going to sit here and call like, this is it, okay? There's no question that you're going to be in a crap load of volatility next week as well, okay? Forget about some of the economic data. Who cares? The Fed's not going to cut, or maybe they will cut. Who cares? Okay, that's going to be out there. That's out in December. You got to focus on right here. A couple of weeks left in in November, and yeah, you're not going to wait for December to see some volatility. You're going to see it next week. Okay, that's what these enormous wicks on these candles mean. Okay, it got crazy. It got crazy last Friday. We rallied back up. It got crazy this Friday. We rallied back up. We're testing right now, but you got to be looking for correlation. And we're just nowhere near it. So if you sit here and start to contemplate that maybe we actually been through the worst, okay, my argument is a very simple one. We haven't even started to sell. All right, as I said, metals, okay, metals are pretty wild out there too. So I've actually seen what I term some bleed over in the volatility. So metals are actually bleeding out a little bit, both silver and gold. What's interesting about this is it's not done on the price action of the dollar. Okay, I don't have a great reason why metals all of a sudden took a hit, other than, well, they got a little overheated this week. Okay, in my world, nothing trades in autonomy. I don't give a damn that oh, you think that they're overheated earlier this week. Okay, this is a bid back and a huge smack down. I think that the correlation is there between the metals now, okay, and crypto. Crypto is getting absolutely killed now. For those of you that will remember, okay. If you will remember, literally last week in my notes, right here in this weekend update, it was crypto cracked and the selling will continue. Now it's crypto cracked, okay, and the selling is going to bleed over. By the way, I tried to position myself into crypto all week. I just tried to short into it and use BitO and so forth so the clients could follow it. Okay, wasn't happening. It just wasn't happening. I could not get filled. There were so many people actually jumping on the bear train over here. And if I don't get filled to good prices, I'm done. Right? I'm not gonna go after it. Obviously, this is the crypto futures, but I just want to show you from the recent high, okay, to some of the actual low over here. It's exactly a 25% decline. Okay, it's serious out there. There's blood in the water. Okay, and at this point, and I said I would expect us to actually test right into 90,000. If you do cross through 90,000, okay, it's bloodbath. Companies like Strategy, right? Okay, it was MicroStrategy. Companies like Strategy, they're not going to survive. And you can actually feel it in here as well today. It's down about 5%. By the way, the trade in here is going to be an interesting one. When crypto rallies, this thing's going to rip, okay, and then completely come apart. But there's some firms that are not going to make it the next couple of weeks. I'm going to make that very clear. And those firms are going to be heavily involved inside of crypto. But the reason I'm bringing up Strategy, okay, is not to tell you they're going to make it or not make it. If crypto sells off, okay, just a little bit more, they may actually have to exit positions. You're going to force longs to actually break. So it's getting real. Again, you get down to the low 90,000, okay, or the upper 80,000 range inside of crypto, all hell's going to break loose. Now, who cares about that? What I care about is going to be bleed. Okay, what's bleed? Basically, it's correlation factors. So what you're going to see is as crypto sees sell-side activity, those very same clients that are in positions, long, for instance, Bitcoin, long crypto, if you have to get out of that position, it's going to reverberate. When I call it bleed back, it's going to reverberate right back into the S&Ps. Why? There's a ton of companies in the S&Ps right now that are either heavily invested in crypto, okay, or the retail trader that's a crossover. So you're going to look at high beta stuff. One of the ones I use a lot, okay, for an explanation is Oklo. Okay, why Oklo? because this is very, very high beta. I know it's energy and I know exactly what they're involved in, and nuclear reactors and small nuclear reactors has nothing to do with crypto. It has everything to do with it. It's a high beta product, and the same people that trade Oklo are the same people that actually trade like crypto products. So look for this to continue to see sell side activity if crypto's down. In fact, it'll actually be like a marquee aspect to look for. You know, Oklo actually trading all the way down to like the 80 level. It's a long way away, right? Okay, you just wait. You see, if crypto breaks, this thing's going to come apart at the seams. So again, as crypto cracks, it's actually going to bleed over to the S&Ps, and it's going to be felt in a number of different ways. All right, last but definitely not least here in the weekend update, I always talk about the SPX. Again, if the marketplace closed right this second, it's got 8 minutes left, we are literally unchanged on the entire week. Okay, so the bid back to the marketplace only took us back to even. After being at the upper edge of the expected move, we almost got down to the lower edge of the expected move. It got all kinds of wild. I want you to remember here, like, you're coming off of a week. You're coming out of a week that had $100, okay, and $23 expected move. That was the week that we just passed through, right? What did we see? Well, we saw more than $123 to the upside. Then we completely collapsed back down, okay, rallied back, massively unchanged. So that's in the books, though. Who cares? It's $123 last week, because you want to use it as a comparison moving forward. What are we looking at next week? Put on, once again, your big boy pants. You're going into almost $150 expected move week, and I like it. Okay, I know some economic data is going to start bleeding out, but it's also, okay, kind of a primary expiration week. So we're going to pass through November's primary expiration like the SPX. It's almost $150 expected move, though, from like, it'll probably settle somewhere into like 145. That's big. It's big league, and I'll tell you why it's so big league. Okay, it's big, and it really matters to me because we actually rallied back today, and this volatility, it's not calming down. That's why I'm saying, okay, vol's breaking. Trust nothing out there. You're going to see sector rotation, snap, heavy correlation. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.